Investors are keeping a close eye on the Federal Reserve. In just a few hours, the central bank will announce whether it's hiking interest rates. And we've got Yahoo Finance's Brian Chung here with us for that. So, Brian, it seems like this rate hike is baked in, but do you think we can still see some surprises from Jay Powell?
Morning, Alexis. Well, probably not. The federal funds future is currently pricing in a 74.9% chance that the Federal Reserve does indeed raise rates by 25 basis points today. That does mean that only slightly higher than 25% chance that they don't. The big question will be whether or not this is what some analysts are calling a dovish hike, where they do raise rates by 25 basis points today, but signal less rate hikes in 2019.
You know, if the Fed is really becoming more data dependent, as they say they are, does the data that we see now say they should be holding off on future rate increases?
And that's a great question. It really depends on who you ask. If you ask the Wall Street Journal editorial board, as they mentioned in their post yesterday, the answer might be no. The data shows don't raise rate hikes right now. But that's what we're looking for clarity from Jay Powell on in the conference today. He'll be expected to elaborate a little bit more on what types of data the Federal Reserve is watching. Is that the jobs report? Is that inflation numbers? Do they care about the stock market? That's what we'll be waiting for at 2 p.m.
All right, Brian, I know you're going to be all over that. Thanks so much. I want to bring in Edward Stringham now, the president of the American Institute for Economic Research. It's great to have you on the show.
Thanks so much. Nice to see you.
What's your thought? Do we get this interest rate hike a quarter point in a few hours from the Fed?
I'm going to tell you exactly what's going to happen 3 hours from now.
Okay.
You know, we've had this long period of what I would say is artificially low interest rates for years, and they've announced that they've been wanting to get away from that. And it's not even clear, like we've got this kind of assumption that the Fed is this quarterback for society and they're throwing the touchdowns. They can do whatever they want. In many cases, not even clear they have the ability to actually do things in such a precise way. So I think that we've reached a point where they actually have to go away from these artificially low interest rates. They say they're going to do it. And if I had to predict the future, it's going to continue in this direction.
You think so? So in 2019, you're thinking more interest rate hikes are in the offing? It's
entirely possible. They don't have the complete ability to set rates like it's science. So monetary policy has what's called long and variable lags. So past expansionary monetary policy, the QE2, QE million, that can show up into future monetary policy. So they're dealing with current conditions and past conditions at the same time.
Yeah, the problem with Jay Powell being a quarterback is there can be an interception. And yesterday we had Paul Schatz from Heritage Capital on, and he was talking about how he actually thinks the Fed has gotten it all wrong. And he thinks the bigger threat to the economy is not a rise in rates, but the fact that they're trying to wind down that balance sheet. And he thinks that they should possibly either pull it back greatly or halt it altogether. What are your thoughts?
Yeah, I mean, they just have this huge balance sheet that they increased the past 10 years, and they've been talking about unwinding that, whether that's going to be not renewing things as they get into maturity, or actually just selling off assets. I think that's actually very important. I think it's very odd that the federal government owns like such a large percentage of securities or debt assets. And so the more that they can get that off the balance sheet, I think is a good thing.
But you don't think that's a threat to the economy as they try to unload that at the same time things globally, the global economy may be slowing down and they're raising interest rates?
I mean, they can do things in ways that can be, disturbing to potentially markets. But it's just a weird precedent that they had set. And the faster that they get out of it, I think the better off for me.
Is this the Federal Reserve basically trying to cushion itself that if and when the recession hits, they have some tools in their arsenal by raising interest rates now?
That's entirely possible. When they put these interest rates basically to zero for so long, it really kind of, even from their own perspective, restrains them because they can't actually, go below zero. And so a lot of people have been saying they need to get back to, historically normal interest rates, even from their own perspective. From the perspective of the rest of Wall Street and banks, I mean, it's very odd if you're a bank and you say, I could lend you money and it could be like close to zero interest rate. Like nobody wants to do that.
Yeah.